Hello and welcome back to the channel where we cut through the noise on mortgages and the housing market. Today we've got a fresh update on what's happening with home prices, mortgage rates, and some important advice if you're thinking about buying or refinancing. Let's start with the good news for homeowners. The latest ICE Home Price Index for June shows homes gained 1.32% year over year nationwide. That's up from 1.03% in May. On a monthly basis, prices rose 0.29%, which annualizes to roughly 3.5% appreciation. That's a solid pickup, especially heading into the busier summer season. So if you've been waiting for prices to drop, the market is still showing real strength. Now, on the mortgage side, rates have been relatively steady this week. Mortgage bonds are trading near unchanged levels, which means the benchmark rates borrowers are seeing haven't moved dramatically. But here's where things get interesting and a little frustrating. The Wall Street Journal recently ran a piece claiming that 80 to 90% of borrowers are probably overpaying on their mortgages because they simply took the first rate their lender offered without shopping around. While it's always smart to compare options, that article is pretty misleading. Here's why. It only looks at the interest rate you end up with compared to some perfect benchmark rate. It doesn't factor in upfront costs, your credit situation, or most importantly, your personal plans. If you think you might move or refinance in the next few years, sometimes paying a slightly higher rate with much lower upfront costs actually saves you money. The lowest rate isn't always the cheapest loan when you look at the total cost over the time you plan to keep the mortgage. Bottom line, the right mortgage strategy matters way more than chasing the absolute lowest rate. Make sure you're comparing loans based on your actual timeline and goals, not just the monthly payment or advertised rate. A great way to see this clearly is by using a detailed loan comparison tool that shows you the full picture, including all fees, so you can pick the option that truly costs you the least over time. Looking ahead, this week's big event is the jobs report. Economists are expecting around 110,000 jobs added in June, with unemployment holding steady around 4.3%. Stronger than expected numbers could put some upward pressure on rates, so we'll be watching closely. Overall, the housing market continues to show resilience, and while rates aren't dramatically falling yet, they're also not spiking. If you're in the market, now's a great time to get educated, run the numbers on different loan scenarios, and work with someone who will show you the real total cost, not just the rate. If you're buying, selling, or refinancing, drop your questions in the comments. I'd love to help you figure out the best move for your situation. Thanks for watching. Hit that like button if this was helpful. Subscribe for more weekly housing and mortgage updates, and I'll see you in the next one.